guys. I don't know if I really like that intro music, but good morning. We're gonna have to kick that one up. It's a little downbeat, isn't it?
Yeah, it's
Not
interesting.
bad.
A
Yeah,
little
not
too.
bad.
We don't take ourselves that seriously. We need something a little lighter. Hey, good morning. Welcome to the Wednesday live stream, boys. What's going on?
Hey
How we
guys,
doing,
good morning.
Alex,
All
Well,
Terry?
good. Yeah, all good. After a holiday, so let's kick in again.
Let's do it. Let's do it. So, Alex, get me caught up. While I was setting up the production here, tell me the late breaking data here.
Yeah, we had just PPI, so we need to break that down. But PPI came lower. I think 0.5%, and we have retail sales also lower.
Okay.
But from PPA data, it's obviously that inflation is further coming lower. So that's good. Risk assets rally, as I see. We also had Bank of Japan keeping their interest rate at minus. They're the only central bank at minus currently.
Yeah.
And yeah, the stocks are going, as I see on futures, are going up. Cryptos are going up. So all good.
That's a big miss on PPI. Wow.
Yeah,
Expecting negative 0.1%, coming in at negative 0.05.
yeah.
Headline month over month. And then
might
core,
need to zoom in on that a little bit. It's kind of small to read,
kind of
so
small.
there we
Core
go.
is, yeah. So actually, we had revisions down too. Good revisions from point 0.4 down to
Yeah.
0.2 in the prior.
Yeah.
And then, as expected, month over month, retail sales, big misses, you just said. PPI headline missing by zero point 0.4 with a 1/10 revision. Interesting. Okay. Well, that's kind of that sort of solidifies the 25 basis point increase here on February 1, and then you
Yeah.
know if they go another 25, we shall see. And then looking at Fed funds, we've beat this, that narrative to death. I mean, they're looking for cuts in the back half of the second half of this year. So we'll see how that squares up.
Looks like they're sticking to plan so far. It's going according to plan, but we know how easily the snafus can come in. But right
Yeah,
now, it's running according to plan.
yeah. I'm just interested how you're gonna raise as aggressively as you have over the last year, and then go ahead and a couple months later just start cutting. I don't know how the market's going to square that up. Let me just take a kind of a crazy look here. The reaction to PPI, I like doing this little crazy macro 1 minute overlay here. I usually just do a percent change like a minute before the data. And what do we see? We see dollar yen lower. Alex mentioned dollar yen and euro yen lower. You mentioned there was a yen move. Was the BOJ announcement, Alex, yen supportive?
BOJ actually kept their interest rate, as I said, at minus zero point zero 0.01.
Okay.
Which actually was giving a dollar a little bit upside, but then the latest PPI moved it further downside. So, but I think we are close. I see dollar index in the last stages, so I expect a reversal on the upside that might be connected with the next Fed meeting. They might be still have a little bit more hard rhetorics, as we know, pulling out some corrective pullbacks. But as I see, dollar yen currently is moving lower, and the yen is strengthening currently.
Got it.
So yeah,
Okay. Okay. Good to know.
not
Yeah, it looks like so. These are the twos up a touch. These are the tens up a touch. I don't have
yeah,
30 or over on this, but just looking at the futures here, pre-market, crypto's added again. Bitcoin up 20 up to 21.4. ETH almost at 16. Futures, NQ a little bit of a bid, almost 6/10. 0.55. Call it yes, 0.355. Rut strong. Small caps been showing a little bit more strength. That's one of the kind of the main themes we've been focusing on in the with the members is small and medium caps continue to show our performance there. So I will be showing you that one here. We got to, of course, look at the index wave count, and we'll have some fun here. Markets are big time in consolidation. We kind of went through a very simple moving average exercise last night in the member video, and I think this XLK, this technology ETF, really sums up the market we're in. So this is the monthly XLK technology ETF. This is the weekly. We are trapped between the 50-week MA and the 200-week MA, as we are caught between the 200-day MA and the 50-day MA. So XLK technology, very range bound. We have some sectors that are weaker, such as consumer discretionary, just by judging just by the moving averages. We are, let me do this guy as a month, this guy as a week, and this guy as a day. We are below on the weekly consumer discretionary, both weekly MAs, and we are barely above the 50-day moving average. So you've got some that are doing well, some that are doing not so well. XLC is actually, let's see here, let's go week, let's go a month, let's go a week, and we can see XLC is a newer product, but well below those weekly moving averages. And then if you look at something, the value trade, materials, all above, industrials, all above, healthcare, mostly above. So is the rotation into value here to stay based on what I think prevailing sentiment is and what everyone seems to be saying and what's happening in the charts? We're not so sure. We're seeing signs. The team's been working hard behind the scenes to show some green shoots from some of these beaten down, growthier sectors, and we have some positions that we'll talk to you about here. So, just taking a look at the S&Ps to start up here, we are again at this highly critical zone of resistance from several sources. The downtrend line, which is actually a downtrend channel from early 22. Coming in, we flirted with it here in early December, again on December 14th. We sold off here to the end of the year. Then we got the January move. Here we go again with this downtrend line. We have the 200-day moving average. It's the 50% retracement of the 2022 decline right here at 41.01. You have the 786 retracement from the little December 1 to December 21 move. I mean, you have everything here. And as I said, it was going to be treacherous. And this is what we said here in the live stream and with our members. It's going to be treacherous up here. I don't think anybody's going to get out of this unscathed or unbloodied. And I think that's fair to say that that's played out. Now, here we are again. We're at the 786 retracement. This is the key decision zone. I've seen some of the most impressive, decisive, long-lasting in terms of implications, reversals from that 786 in my career. I often find it to be a stop-run target through the 618, which everyone knows about. 786 is where some pretty nasty reversals happen. So it's decision time here. And if we break, we're very calmly going to take this minute degree wave 2 and place it here. And that means we are now in a third wave rally with clarity in terms of where the Fed's going, in terms of where rates are going to go. And we'll see, I need to look at that Fed funds target. Alex, maybe you can do that as I'm talking here. See if they've adjusted in the next 2 to 3 meetings based on the data this morning. Do we have more clarity as if the Fed's going to get a 5 handle? So that's the S&P on the red count. We're tracking 2 wave counts, red and blue. For the most part, red is more bullish, blue is more bearish. This is the NASDAQ red, and it's not as dire of a breakout situation as the S&P is at that 786. The NASDAQ being that, as I just said, growth has been weaker off the lows, even with semis doing so well. We're only at a 618 retracement from that December 13th to December 28th low. So, this is certainly a potential reversal zone as the S&P is up here, NASDAQ's down here, and we shall see. The decision is going to be made. We have a lot of similar price action. 200-day moving average is way up here at 12,118. We have 618 of this little move. We've got downtrend from 2022. I don't think we're even close to a 50% retracement off of the 2022 high. It's going to be barely a 38% retracement of the 2022 decline. So if we don't hold, this is what we're looking at. We're looking at lower prices in the NASDAQ. We do see some green shoots here and two specific markets. One is going to be small caps. We're seeing a very good rotation in small caps and medium caps, and specifically within the growthier sectors. Our spin doctor, Terry Long, has been hard at work on that. And here's evidence of that. As I just said, the S&P's at the 786 retracement of the mid-December to late December move. The NASDAQ's at the 61%, 61.8, and the RUT is at the 100% retracement. It's back to the old highs. It's back to breakout. So that's interesting. And then another one within that growth trade that I mentioned, the other one that's at a 100% retracement from that December high are semis. And semis are showing some pretty good relative strength here. I'll show you the position. I don't even have my platform loaded up, but we have a option trade going right now with the members. We have two holdings in our swing trading portfolio, semis that are exhibiting very good relative strength from a rotation point of view, showing good technical setup and good fundamental setup. So we are carrying some semis. We're leveraged up a little bit with some options here in the semis. I'll show you that trade. So it's big time. We shall see. I'm proud enough. I guess I've been doing this long enough to say, when I have conviction in what's going on and I feel like I have an edge to put money to work. And there's other times where, man, it's a coin flip which way we're going to go. So I feel like I give a slight edge to the upside. But here's the problem. I think it's asymmetric risk reward. I think there's a slight edge to moving higher, but I think the scope of how high we could move is a lesser percent than how much we could move if we move down, right? So it might be, let's call it 60-40, we move up, but we might have 12 to 15% of the upside, maybe 20-25% in the downside. So a trader finds himself in a precarious position, and you can't be too proud as a trader, and especially people who stick our faces in front of the computers or in front of the cameras like we do, to say that. That I think it's a tough situation. So, guys, thoughts on that?
Yeah, I concur with that. I think.
Yeah.
Go ahead, Alex.
No, just to fill you up, Fed 94% for 25 basis points move in the February meeting. And then in a March one, you have a target rate 55% for a move to 475 to 5%. And then the next one.
Wait, hold. Did that move up? Did that move up after this morning's data from yesterday and a week ago?
Let me see. Just a second. Yeah, so we have now, it moved up only 1% almost for the next meeting in February. For the March one, we have a move for 3% for the 25 basis point move to a target rate. So now 74.2%, we're going to move to a target rate in March. But then what is interesting, in May, you have 55.5%, they're going to pause. And that moved.
Yeah.
That is pretty much now in line with what it was on 17th of January. So this is kind of stabilizing.
It's more than that because you have 50. So go back to March. So you have, so if we go up to the new one's going to be 45475 in February. And then the chance of staying at 45475 is 20%. And then going 25 basis points is 77.5%, right? 475 to 5. And then May, you have 56% chance of unchanged.
Unchanged,
sorry,
yeah.
Of wait, I'm losing my mind.
Yeah, that's unchanged.
That's
Correct.
unchanged. So
Unchanged. Yeah.
they're putting
Plus,
they're putting a 13% chance of a 25 cut. Then
right.
wow. So that in the week,
So
I mean
you
that's
read
not
it
a
as
huge. Yeah,
68% chance of staying unchanged or
are
actually
staying
even cutting.
unchanged
So,
or actually cutting.
yeah.
Yep. Okay. Interesting. All right.
Yeah. It, it
Go
may
ahead, Terry.
actually work out for them this. It may actually work out for them this time. You know, that the difficult thing for the Fed to navigate that soft landing that everybody's talking about,
Yep.
there's still no guarantee. But at least right now, the markers look like they're staying in bounds with what they said. So
We shall see. We shall see. It's interesting. We're going to be raising, and then 2 months later, we're going to go out and cut February, March, April, a little bit more than that. All right. So big time decision point. Let's just say hi to everyone. See if there's questions, comments at the top. Let's get up. You guys watching the YouTube window. All right. Good morning, Alan. On the info at trading or the trading analysis channel, we're running this live streaming on 2 channels. So we'll monitor those questions, comments. If there's markets you guys want us to take a look at, go ahead and throw them in there. Let's send it over to Terry. Let's see what he's looking on the sectors. As I kind of hinted, we're kind of looking at some pretty good rotation into growth. We're making some moves with our clients.
well. One thing you said, is the value trade rotation here to stay? And that's kind of an oxymoron to think about. Rotation is movement and motion, and stay is holding still. So I'll tell you, under all
That's a good point.
circumstances, the
That's a
market
good
will
point.
continue to rotate.
The only constant is change. Yeah, bad choice of words. Right?
Exactly.
Yeah.
Yeah, really, and of course we had MLK Day Monday. Some markets are closed. There's not a lot of price action here, but really, I mean, after last week's huge up move here, 2.7% in the S&P, and 4.54% up in the NDX last week. You notice that was double, almost.
It's interesting.
Slightly less than double, but almost, the NDX moved dramatically higher. And as you mentioned earlier, they're floating back up in here between the 50 and the 200-day moving average. And basically the S&P has actually kind of recaptured that 200-day moving average, which sits at 39.77. And we're, the price action penetrated just above that. Of course, we, again, exactly what you said, we really need to get that push, just go on and get that push higher, and then we'll know. Otherwise, we've got to remain patient with things, right? So pretty quiet action on the sectors, but this has got pre-market action in there. I'm seeing consumer discretionary up 1.13%, leading the sectors today. Before the market opens, and technology up 1%. And here's a real quick look at our sector, relative strength sector leader scoreboard, where we, just continue to see degradation here in momentum and some relative strength give back in energy, industrials, materials. You've got that consolidation move that you mentioned, financials, staples, healthcare. They're all the leaders, the value leaders, but they've lost all their upside momentum. You notice this group is sitting close to this horizontal line, which means relative momentum to the S&P is neutral, and industrials and materials are heading that direction. Meanwhile, on the other side of the fence, we've seen the utilities gain some upside movement, although its vector did shift back to red. It had been blue, and then last week it kind of weakened a bit. But technology made a back and forth little whipsaw here. You can't really see that, but it went down and then shot back up, and it's sitting holding neutral. So, what's happening is there's a change in effect. Obviously, since we're no longer trending, these underperforming sectors are no longer trending down relative to the S&P, and they're actually starting to recapture upside momentum. Look at the rapid rise here in communications, right? That sector we know, languished down here, for a long time, right? The communication sector basically is the first one to give up the ghost in September 2021. It never really followed out of the mini rally that came out of that. And so it's been in the longest consolidation. Now we're starting to see some pretty good upside moves. All right, enough of that. So one of the things I provide our members each week is a detailed look at what we're looking at behind the scenes in trading analysis. And Todd and I have been interested in what's happening here in the technology group. This is the industry subgroups for technology, right? So you can break the XLK down into stocks that focus on electronic equipment, computer hardware, telecommunications, computer services, electrical components, semiconductors, which we talk about a lot, software, and renewable energy. Right, that's the newest addition to that group. So we not only look at the sectors and the indexes, we kind of want to drill down and look deeper inside the sector to see what's happening in the industry subgroups, who's moving and what. And look at this one here. This is computer hardware. You see the little kick here. We've got a little bit of a kick, not a completed rotation, right? I like to see the hooks form and turn all the way back to the right. Software, we've got that kick and we've got that move back up to the northeast here in software. So beating down hardware, computer hardware, and I'll tell you what, the number one stock in that group is Apple. Largest market cap obviously pulls that one down, right? Software group is here. And then this is semiconductors. And I do see a little bit of momentum shed this week, but we've been really seeing a pretty good move in semiconductors, and it probably needs just a little bit of time to cool off. Let's take a look inside the computer hardware group, and there's Apple, as I mentioned earlier, with the largest market cap. But the group itself is made up of all of these stocks. There's about 20 of them, I guess, here in this particular group, and you can see some brand names here such as Dell, Logitech, you got Hewlett-Packard, and then there may be other names in here that you're not really familiar with, right? So as Todd was mentioning, it's looking more not only at the large caps, but mid caps and small caps. And if I were to take this list and pull the market cap up, I'll tell you that I think it ranges anywhere from whatever Apple's $2 trillion valuation is down to about a $3 billion, I think, in the smallest one in here, right? So we like to look at what's happening here, but it is interesting to note that Apple's move down is actually stalled and changed direction, right? There is a heading change there, so that could pull the entire group back up. Okay, let's look over here at software, right?
And
so
Apple,
the biggest name
I'll show you guys
software,
that when you're done. Apple's held a very key Elliott and Fib support zone,
Yeah.
so I wouldn't give up on that.
Yeah, I think that 125 level might be it for Apple, and we may
Yep.
be moving back up to 140. So yeah, we'll look at that. So let's take a look here real quick at software. So what's the biggest name in software? It's probably Microsoft, right? So here's Microsoft right there at the center of the group here. Microsoft has started moving back up to the northeast again after a long, I'll pull the trail back a little bit. You can see there's and I'll animate that for you. There's the downtrend, right? Microsoft fading down. That has turned. So when that turns, that means, and that's turned twice actually. There's the first hook right here. That happened the end of November. And now we've got a second hook, and that second hook has now kicked it back to the northeast. This should start to get us interested once again in some of these beaten down names, as they may be, they appear to have changed momentum headings, and that, to me, that tells me that institutional money is starting to flow back into these stocks. Anything to add here before I move on to semis?
Nope, I'm on board.
All right, let's take a look real close now. In semis, I've got this in a little bit different format here. This is the entire semi subgroup. Now, we look at this in multiple time frames, monthly rotations, weekly rotations, and even daily rotations. And there's a ton of semis, there's a ton of stocks in here. The thing that catches wants to catch our attention here is how all of these semis got pushed all the way down. You can see I animate that throughout the year, right? Semis lost their leadership condition. Not all of them, but most of them, right? There's a few over here that held on to leadership all throughout, but the majority of the group came down here into this lagging quadrant on the monthly time frame. Right now, I see many of these semis on the monthly time frame rotating north and northeast, and actually they've got these rising blue improving trend bars that kind of helps me pick out the cream of the crop out of this group. Okay, and here's Taiwan Semi, the largest market cap in the semiconductor group, has also made a turn, so it's no longer fading to the left. Now let me do one little thing here in this table. I'm going to just filter out all the ones that are in the lagging quadrant on the monthly time frame. Right, so we look at these. So again, I've already started to see some positive action out of some of these on the monthly time frame. Let's look at where they are on the weekly time frame. That same group that was monthly lagging but is now, this is where the weekly time frames are showing us, right? So a lot of activity up here in the improving quadrant. A lot of those stocks have actually returned back into the near term on the weekly time frame, and more shorter term they've turned into leadership, and there's many more ready to follow behind. So take a look at this list. It depends on what your trading investing time horizon is that you want to use or pick or choose on which time frame you want to trade in. But I'll tell you, in our weekly time frame, we're looking at, the next, you can forecast this. It's the next, 3 to 6 to maybe 8 weeks or so. When you get a vector like this that could continue to remain in leadership, and maybe even longer, because a lot of times stocks will get out here in this leading quadrant, and even though like ASML, where you see it fading, ASML is probably one of the biggest leaders out there in the semiconductor group as far as relative strength. And Todd, I think it was just an unfortunate timing of the entry. I don't think
You
there was
had to
anything
bring
wrong
it up, T-Long.
with No, there's nothing wrong with that. Nothing wrong
I'm
with
joking.
admitting that.
Nope.
Admitting that. I think the opportunity to get back in it is still there. Now, I like to plot hike and ashy candles. You can notice the trend in the green bars has run its course. Excuse me. And I think right now we're in another little short-term consolidation. We may have another opportunity if we get a little pullback here for a new entry. I think there's a lot more to come. Matter of fact, this longer dated downtrend channel that these things are really subjective, but I'm going to anchor it on this swing wave high right there, and because the move is up above it, I'm actually now going to call that a new support line.
Yep.
All right.
Yep.
So I'm going to look for this, kind of a corrective move to come back. We may find another re-entry in that. All right, that's all I've got, Todd. I need a sip of coffee. My voice is gone. So
no, that's good work. Yeah, I'm laughing with Terry. We had ASML early into the end of the year, and my stop placement was not ideal, and we got knocked out pretty much to the lows as it's come back ripping. So, we have two in its place. We have two semis that we're holding in the swing trading portfolio, but I won't forget that ASML just because. Look at this on Terry's screen. Look at the outperformance of ASML, which. It's a semiconductor that it's a proxy for Chinese demand because it's a company that does supply, and there were some questions about
this is a
would they
Netherlands
be. Yeah, it's
company,
a Dutch
right?
company. It's a Dutch company, and there was questions as if there would be some sort of encouragement of sanctions or encouragement for them to not provide semiconductors to Chinese defense. And that news, we were in the stock when that was coming out, and I said, ooh, that's not good. And then we looked at the price action. Stock took it in stride. So you have a technical, you have a rotation, relative strength point of view, and it weathers potentially bad news, I thought, very well. And I didn't do a deep dive in the story, but that was even more so. I was like, oh, this is a great stock. So
Yeah, I didn't really deep dive into any of the fundamentals. I was just looking at the technicals here, and we bounced cleanly off the 200-day moving average, and we're moving back up above it. So
yeah.
stocks moving above the 50, the 200, the 50's moving higher. That tells me an uptrend's in place. So yeah, we definitely have a lot more opportunities to go, Todd. All right,
Yep.
back to you.
Yes, sir. Well done. Just following up what Terry was saying on Apple, and then I know Alex has some some charts to back up what we're looking at, and then I do want him to look at crypto because that's been moving. But the long-term Apple count, I thought I would just share it with you for 1 minute here. This is, those of you who have ever studied Elliott know that trends usually reverse in something that resembles a 5-wave move. This weekly on Apple is not what you call a 5-wave move. When you go way back, I love doing this exercise. It annoys some people, and it kind of cracks me up. But if you go way back to let's go 20 years of Apple. I don't see much in that very simple elementary chart that says the top is in. But we'll see. Plus, I don't see a 5-wave move in the downside. So what's the wave count? Best that I can see is it's just a triple. It's just a ABCX, ABC. It's a double combination. We held the first zone of support down here. The first zone, which was not hard to find, 126 to 123. We're very clear. We said that should be the first sort of wall or floor of support. If not, we have two more confluences of support zones lower in Apple. And now we have this pretty simple broken support line here, now offering resistance. If you can peek up through 138, then you're just going to have to go to your fib retracements, your subjective trend lines. So, maybe we're going to count another one into 143. But this is going to be the next challenge for Apple. And if you can break above that, then for me, I think that sort of solidifies the corrective count. Alex, let's bring you in, my man. How you doing?
All good. Just prepared a couple of charts from this
Nice.
Terry's Outlook. And also we have ISML chart ongoing. So pullback is probably coming. So we will have another, I think, an entry point in a couple of weeks there as well.
Nice. So share your screen on Zoom.
Sure, I'm going. It should be there.
Yep. All right, here we go. Okay, you are live.
Okay, guys, so let me just start with this ISML chart. So 5 waves up. Our target originally was 700 to 720. So we are slowly coming up there, where we have a couple of fib zones, which I think it's going to respond, and potentially we're going to have a ABC pullback, which will give us another go at it on a further solidifying the upside movement. So this is just a beginning, a first 5-wave moves from this 4th wave lows. So I also looked at NVIDIA, which I must tell you honestly, I'm starting to like it. From this ABC pullback down, 5 waves up, small ABC, and we have impulsive declaration of this stock going further on the upside. So I think a small pullback, we might have a small exposure, exploring a possible move up to 250, 270, 300. So I think it's looking good in my book currently. I also have Apple. You already went through it, and
Oh, sorry, man.
CrowdStrike looks good technically. So we met this 50% and 100% A versus C zone pretty nicely. So it's on my watch list for the impulsive move on the upside and the pullback might be good to explore, because this looks very corrective to me after the impulsive move on the upside. That's a software group. And also Datadog from the Terry's charts also looks pretty nice. 5 waves up with a 3 waves pullback. So I have a distant zone. So on a first impulsive move up, corrective pullback might be a nice buy opportunity. So we have actually 2 stocks from the software group. We have one from the hard, and then we have a semis, NVIDIA. So 4 stocks I selected for this. So let me just switch to
before you get,
yeah.
Alex, could you just drill down to that CrowdStrike? I'd like to see that quick, if you don't mind.
Yeah, sure, no problem. Okay, let me go to a daily. So I have this as a 5 waves down in A, up in B, and 5 waves down in C,
Nice.
reaching equality and 50%.
Nice.
Even if you count this as a trip or a double, so ABC X ABC, you get the same levels for the. So we have a nice kind of a, but still this is not enough to be involved. But I just put it on a watch list. I think it should be observed, because this is a nice 5 wave moves up, 3 waves pullback to this target. So any impulsive resolution in the next couple of weeks, pullback might be explored for the relatively nice developments, at least to this target of 200, where is the B wave is. So we are trading now at 106. So
Just
technically,
zoom in, man.
It looks nice.
You're making that daily
Yeah.
chart into like a yearly chart. Give me a half day.
Sorry.
No, I just want to see if it's impulsive off the lows.
Yeah.
Is it? Can you see
Let
anything?
me go 1 hour.
Yeah.
Starts to look like, still not 1, 2. We need a little bit more on the upside.
Yeah.
So if you
That's
want
interesting.
me to put this, and it's just on the watch list. So if we continue to move up in 5 wave fashion, then a pullback might be a very interesting one
Nice.
to be involved.
Nice. All right,
So,
hit us on crypto quick.
Nice zone. Yeah.
Yeah, that's good work.
Crypto
Alex
quick.
while he's bringing that up, Alex is we're putting Alex to work on stock setups. Alex and I have been doing LIQUIDITY together for 12, 14 years, man, too long. We're putting him to work on stock setups for our members, both on the option service as well as the swing trading portfolio service. So we're locking him in the LIQUIDITY cave to come up with the best setups based on the macro and the rotation analysis that Terry and I are doing. So you're doing good, Alex.
Yeah, good. I mean, good process. We are establishing a very solid process for picking up the stocks, doing macro and relative rotation graph and Elliott. So as you can see, Bitcoin, we have invalidated the ending diagonal wave count, which is very interesting in my perspective. So if we see a full 5 wave move on the upside develops, which we might in the next week or two, pullback will be very interesting for me. So what you are gonna like is this very aggressive wave count on Ether, which is also showing a strength.
Now you're talking,
in a
baby.
sense. Yeah. So we were of a stance in our crypto membership that Ether has already posted a wave 1 high. The question was, we were looking for a complex. I noticed before you have this wave count, which might be a right one, because now we are developing possibly the first wave in the third wave, which is going to be a very interesting buy after a small pullback on this big trend line. So we might be going pretty aggressively if we see this actually unfolds on Ether on the upside. So this is my most bullish wave count. And as you can see, if we look at Ethereum, Bitcoin, we are staying
It's still big.
bullish for the, it's still very, I mean, we are in a little bit of a correction, but still it's a very bullish process, which means that Ether, if we start to move this on the upside aggressively, it's going to be favored one for the next bull run. And as you can see, we have a couple of targets at 3,600, 4,000, 4,600. So if we get on the next bull run, this will be the most likely the outlook for Ether, which is very interesting from the perspective of our members.
Yeah, Alex, not to drag this
Yeah,
on. What if
sure.
by chance that Ethereum is ABC triangle X, this is a triangle, and then we have another ABC down, like that wave 4 that was in the summer 22, how big is the same degree wave 2? Is
Well,
it
if you compare that by a time, so let's do that 4 versus 2.
okay?
Uh,
Yep.
let me just do that. So as you can see, this is pretty comparable. So this will be around 2618 around April of 11th. So that will be the next mark. We actually stopped here around 1618, which is the perfect match for the time duration. Okay. So yeah, so that depends. So if we anchor this one to 1618 will be the perfect one. So consider this just as an ABC.
What
because
about price? Sorry to interrupt. What about 4v2 price?
4v2 price, let me just do that quickly. 4v2, 100%,
Oh, okay.
almost exactly.
All right. So we have room. It's not obnoxious. It's a big wave 4. It's not obnoxious though.
Yeah, but as you look, Ether was favored. It was trading in most of this time where we have the FTX collapse, fairly above and just a touch below 200 moving average. And now we are trading above again it. So usually when you see that, this shows underlying strength, while the Bitcoin was trading for most of the time very much below 200.
Yep.
Which is seeing on this cross. So as you can see, my best case scenario or my most bullish scenario is we go a little bit more upside in 5 waves. We meet this big trend line from the previous highs. We correct a little bit, and then it will be a decision point. If we see the macro conditions aligns, then this will be a really score further on the upside, and nobody's expecting it. So I'm pretty much, as you can say, watching this with very much of an interest, because I don't think anybody expects this further move on the upside.
And
Yeah.
this just go ahead, Alex. Sorry.
Yeah, no, it's done. I'm done.
I mean, and that just I'm just gonna remind, why do we even if you're not a crypto trader, I mean, just you need to be aware of the correlation that continues to exist
Yeah.
between Bitcoin and the stock market. You know, if you just look at,
Yeah.
go ahead. I mean, this is Bitcoin over the
Yeah,
NASDAQ.
yeah.
Yep.
Don't forget also good correlation with semis. Bitcoin and semis has a
For
really
sure.
nice correlation. Yeah.
For
So
sure.
if we are bullish on semis, then some of these charts may play out very well.
Yeah. So we have a 50 period correlation right now of 0.45. Of course, 1 is a perfect correlation. And, you know, you can see NASDAQ's kind of hanging, Bitcoin's kind of hanging. We're trying to squeeze into higher levels. Now,
Yeah.
Go ahead.
Yeah, I just said that semis are also very correlated very well.
Right.
Maybe we can.
Oh, yeah. Let me see if I can throw that in there. Can I overlay left scale? Overlay left scale, SMH. I don't know how this is going to work. Oh, interesting. Oh, and that's a good, you just set me up. It's a good segue into, I said we have an option trade on in semis. Look at the outperformance in semis to the NASDAQ and to Bitcoin. Wow. Look at semis to the NASDAQ
Yeah.
and Bitcoin. That's amazing. Wow.
Yeah.
All right, so let's take a look at semis here on the open. This is just a little bit longer. We're getting into member content here. Mark Spotify down. Watch this one. This one's going to come ripping back, I think. It might come ripping back. Semis, a little bit of a gap up. So bearish count in the SMH is this. And we need to hold below 234, it's about 5.9, for it to be a E of B triangle, which gives us a lower price. If you break above 234.60, it invalidates this wave count, which I would be very happy to see done. And we quickly and calmly move to the original one that I showed you at the top of the show. We have a kind of a crazy butterfly going on right now. 2 days to expiration. It is this SMH right here. It is expiring on Jan 20th, and it is a 230, 240, 245 broken wing call butterfly. I was up 1,000 a minute ago. I'm up 850. Fine. So we were trying to get up into the 235, 240 mark based on a potential breakout here from 230. Put it on back in here somewhere. I thought we'd get a little bit bigger move, but it's fine. So we need to really get moving here up to 231, 232, because if I hang into this butterfly, this purple line, I forget which is the purple, which is the T line, but if we stay at current prices and we get towards expiration, watch that purple line melt into the expiration, which is teal, goodbye. So we really need to be watching this guy here today. We need him to be up 232, 233, and we'll continue to hold there in SMH. Okay, we are trying to break out, though, Terry and semis. Interesting. Who's leading them? Let's sort by market cap. Just take a look at the semis. TSM up 2. NVIDIA down a touch. ASML 2.1. Broadcom. These are all sorted by market caps here. KLA 10 core on the move. So semis are going. Interesting. Okay. Last thing I just wanted to mention is the rotation here. Where'd it go? Where'd it go? Growth value right there. Okay. So we're seeing a rotation, and specifically within growth, it's small and medium cap. So small cap growth, monthly rotation coming in, mid cap growth, rotation coming out of the basement, trying to move into improving. The large cap growth, trying to make the move, but a little bit more lethargic getting off the mat. And what's rotating out? Large cap value, medium cap value, and small cap value. Some interesting things happening here, guys. Cryptos, semis, rotation, interest rate clarity. What do you guys think? 2 questions. Are you bullish or bearish for the first half of 2023? And the second question, my team hates me for making this move. Do you like white background charts or do you like black background charts? Terry and Alex are complaining. They're like, it's so bright in our eyes. We don't stare at white all day. I don't know. Tell me what you guys think. Terry's shaking his head. Go ahead. You can say, oh, wait. Did I lose your audio? You're muted, Terry. You're muted.
Yeah, I was self-muted. I'm in favor of the black background, but yeah, I agree, you know, for presentation and print, sometimes that white looks a lot cleaner, but I can't stare at it all day long. So.
I know. I'm sorry. Tesla resistance into 143. Members asking about gold. I do want to take a quick look, and then we're going to roll into the member webinar here. What's gold doing? 1924.
Gold has been pushing higher, believe it or not. Actually, just continuing to push further and further above its 200-day moving average.
Yep, it is.
You know, on this time frame, I know you don't like it on the longer time frame, but on this time frame, it's got some upside momentum. So
little bit. I mean, is that the guts of a wave 3 right there? I mean, we barely. I mean, it could be going, and you know, just I think too many people have been burned on the gold breakout. You know, ever since 2020. You know, we are still incredibly range bound, so it's just important to keep that in mind. Maybe. I like copper better. We hold Freeport. I think kind of base metals are showing better activity. Freeport should be on the move today, Terry, huh? Freeport up 2.3.
Yeah,
Nice.
Freeport's been doing real good. So
nice.
We even moved our stop up to break even. So and we're continuing to have unrealized gains sitting on that position. So yeah, it looks good.
Yep. Two goofy stocks. I've been pretty public. I talked about this on CNBC last week. Crocs. I'm watching for an entry here. I kind of missed it on the breakout. Crocs over Nike. The CNBC crew kind of laughed at me on that one. And oh, by the way, I'm going to the New York Stock Exchange for CNBC Live on Set for the first time since March of 2020. I'm excited to be back. Spotify is the other one I mentioned. Watch this one. This one's coming back. Fundamentals are strong through the Joe Rogan controversy. Completed 5-wave move off the lows. Broke resistance here at about 86, 84. I'm watching Spotify on the upside. All right, that's a lot of information. Hope that helps, guys. Terry, Alex, great job as always. Remember, webinar starts in 15 minutes. Lots more to talk about. TradingAnalysis.com. And hope you guys are well. Let us know what you think. You bullish, bearish for the first half of 23? I was doing some good reading here on the specifics of the January effect. Jeff Hirsch does an amazing job here. It's got something like an 83% success rate where January goes, the rest of the year goes. So far it's off to a pretty good start. All right, guys. Any closing thoughts or put a wrap on it?
Members webinar waiting, so let's go.
All right. The boys are tired after a vacation.
There's just too much to talk about, Todd. We could just go on forever. So
I know it.
And that's what we're going to do here in the members webinar.
We're getting ready for. All right. Hey, thanks guys for watching. Appreciate it. We'll see you guys next week. Take care.
See you guys. Bye bye.